You can share your screen so as not to get bored.
Okay. So let me see what I have here. Let me just share my DXY chart. Okay. This is all I have right now on the DXY, but let's see what we can talk about regarding the fundamentals. So fundamentals, right? Everything is set in motion by the actions that the central banks, take.
Excuse me, Patrick.
Hmm?
Can
Yeah.
you focus just on the EU fundamentals or DXY or USD or
Okay.
United States?
Okay. Yeah. DXY and EU. We have to, when we talk about DXY, we have to talk about EU because they are inversely correlated, right? I'm sure you know
Yes,
math
yes, of course.
basics. So inverse is the, when you convert upside, pretty much upside down for the fraction. That's what inverse means. So okay. But since we're talking about the DXY first, every action that the Federal Reserve is the central bank of the United States, right? They've been around
Its
for
name
many,
is the Federal Reserve,
yeah, Federal Reserve is
name
the
of
name of,
the Central Bank of America.
yes, central bank is the
Yes.
Federal Reserve is the central bank of the United States, and they control a lot of things. The two things you have to remember, the two very basic things you have to remember are, let me just write it down here. They are monetary policies, right? And there within the monetary policy, there is something called QE and QT. And this is quantitative easing, and the other one is quantitative tightening. So when you think about these two terms, are you familiar with any of these terms? QE and QT? Have you heard of it at all?
No.
Okay, so
I
let's talk
heard
about.
about monetary policy, but
Mhm.
in details, no.
Okay, so
I mean,
monetary.
monetary policy, I think it's like the way money moves or the way it is regulated in that country or in the world in general.
Yeah, so monetary policy, yes, that is it's pretty much the word itself. It's a policy that the central banks implement in order to control the interest rate, pretty much. So only thing that we have to really care about is the tone. So for example, for Federal Reserve, the chairman is Jerome Powell, right? So whenever he goes on the stand and whenever he testifies in front of the Congress or whenever he announces the rate hike decision, the what things that we have to watch out for is the tone that he sets out. So tone, when we're talking about tones, we can divide it into two separate, two separate tones here. So one is hawkish and one is dovish. So
Please,
when we, Mhm.
how do you spell tone?
How do I what?
How do you spell tone? You said tone.
Yeah,
How could
tones. So tones, okay. So two tones, right? We have two tones. One is hawkish tone and one is dovish tone. Hawkish means bullish for that currency. So DXY, when we say DXY is hawkish, it means bullish. Okay. And the dovish means obviously what? The opposite, right?
yes?
So dovish means bearish. So what makes up these outcome? What makes it more bullish and what makes it more bearish? What makes it more dovish? It is the interest rate. So whenever we have quantitative easing, it means
Decrease,
lowering of interest rate. Okay.
mm,
And then when we have the tightening,
increase.
yeah, um, yeah,
Excuse
increasing.
me, what do you mean first by interest rate? Because uh,
Mhm.
what I understand from this term, that, for example, when you want to get a loan from a bank, you
Yes,
have to pay the loan
of
during
course. Okay.
following a
Okay.
certain time, and then you have to pay an interest. Is that
Yes.
this is the interest rate or what?
Yeah. Okay. So now let's talk about the credit cards first. So I'm gonna talk about how it works in the US. Okay. So let's say the Federal Reserve, right, decides to raise the interest rate, and Let's say right now we are around. So in the 1970s, the inflation got so bad, the interest rate went above 10%. Just letting you know. It just, I'm just talking about the past a little bit. But now that we're talking about the quantitative easing, quantitative tightening in relation to the credit cards. So whenever you spend money using your credit card, I'm talking about the United States here. So if I spend money, if I buy something with my credit card in the United States, if I don't pay off within that same month, same statement period, I would have to pay interest rate on that product that I bought using the credit card, right?
And how you can buy something using credit card without paying at the moment?
Okay, well, using the credit card is pretty much a loan. So whenever you buy something with the credit card, it is a loan. The reason why I'm talking about the credit card here is because whenever the Federal Reserve raises interest rate,
But
every company's com every company's interest rate on the credit card goes up after 3 months. It's not right away. It's not exactly the same. It doesn't happen the next day. It doesn't happen even within the same week. So let's say let's say uh, right now we're at 4.75% for the Federal Reserve interest rate, right? We're at 4.75. So if the Federal Reserve raises the rate next time on March 22nd, that's when the next hike is going to be announced. Let's say they raise it by another 25 basis point. So basis point is same thing as point. So 50 basis point is 0.5, 25 basis point is 0.25. But let's say if they raise it again, everyone in the United States who has a credit card debt, they're gonna start paying more back to the bank. So whatever the Federal Reserve does and raises the interest rate, it affects the other banks like Chase Bank, Citibanks, HSBC. But like I said, it doesn't happen right away. It starts affecting them at a later date in about 3 months to the consumers. Does that make sense to you?
yes, and how it can affect the other banks?
Okay, so Federal Reserve Central Bank is a main bank, and when we're talking about the local banks, subdivided banks, we're talking about Chase Bank, right? We have Chase banks in the United States. We have Bank of America. We also have Citibank. The rate at which the Federal Reserve, lends money to these other banks, it goes up. That's what it means. So when someone takes out a loan, so there's a SBA, there's a government agency called SBA, right? SBA is Small Business, I believe, Association. And these small business association, I could be wrong about the acronym, but the SBA, they lend money to small businesses like the one that I own. So if I take out a loan from the SBA, if I get an SBA loan, so I actually got an SBA loan around COVID, and around that time it was 3%. But if you take out the loan now, because the federal interest rate went up, everyone has to pay at least 4.7%. So it affects all the people who borrow money directly from the bank or the SBA, government agency related banks. So it affects everyone, all the small businesses who take a loan, even companies like Tesla, right? People think that Tesla and all these big banks, big companies, they have a lot of money, but all the money they own, majority of it is evaluated based on the stock value, right? And a lot of times, all these companies, the investors, they borrow money to invest in the companies like Tesla. So people think that the money's coming out of their pocket, but usually all these big guys, who have a lot millions of dollars, they take out a loan and then invest it, and then whenever they get a return on the investment, they have to start paying back the banks. But when the interest rate goes up because of the Federal Reserve is raising it, all the big guys who borrowed money now have to start paying more back to the banks for the borrowing the money to invest into Tesla. Okay, I'm just making an example. So it is not just us that is affecting, it is affecting everyone. That is why everyone, when we have quantitative tightening, when we have interest rate going up, all the stocks usually come down. All the stocks, so DXY, this is another big fact that people must know. DXY bullish, bearish, US 30 bearish, SPX, S&P 500 bearish, NAS 100. So this is the relationship. DXY bullish, always bearish for the stock market. So when the DXY is going up, it means people are, and the hedge funds are liquidating their position out of the stock market. And when DXY is bearish, all these big companies are putting back money into the stock market. Is it a little confusing, or just let me know?
Now, what I understand from what you have just said
Mhm,
is that if the interest rate is if we have adoption a quantitative tightening, I
mhm,
mean, if we are increasing the interest rate,
mhm.
that means the banks or the hedge funds are not gonna take loans from the banks,
They're gonna
but
take less loans because they have to pay more money
less
back now.
loans, yes,
Yes, or
yes,
pay,
less
yeah,
loans,
or take out no loans. Yep.
and then they are not automatically they are not going to invest in stocks. Then stocks market will be bearish.
Yeah. So they will either take out less loans or start selling their stock to pay
To
back the
buy,
banks. Yeah, because
yes.
the interest rate went up. So now they need more. They need to liquidate more positions to pay back their loans. So even like all the biggest supermarket, like Costco, I don't know if you have heard of a company called Costco. It's one of the biggest supermarkets here. It's a chain. Walmart here too. I don't know if you heard of it. Whenever they open up a new store, a big store, it's a very big store. Every store is very large, and whenever they open up a big one, and I know this because one of my family member owns a big supermarket. He's not related to me, but he's just a family member. But whenever they open up a new supermarket, they borrow literally like $10 million, $50 million to open up the big supermarket, and they pay off as the cash flow comes in the next 20 years, 10 years. So if the interest rate is going up, all the markets are going to downsize. They don't want to open up new store. In order to create more jobs, the supermarket and the companies, they have to um, increase the size of their company, right? But if the DXY is
I
bullish,
have a question about
yep,
jobs
yep,
because I've just seen a video of President Biden saying that they have just created like 300,000 new jobs, and they
mhm.
are willing to achieve like 1 million jobs by increasing interest rate. How is that related?
No, so that is another little bit of a bullshit because it's not technically new jobs. It's the jobs that people lost and they're going back to it from COVID. Yeah,
Yes,
so it is
yes,
just a campaign propaganda in a way. It's not new
because
jobs.
the
People are just
elections
going back.
are strong. Yeah.
Yes. People are just going back to the jobs that they lost. So right now, with the US healthcare, you know how expensive US healthcare is. I told you one of my medications I
Yes,
take.
you told me like
Yep.
30,
Yes.
3K or 5K.
Yeah. So even with copay, I still pay like $3,000, right? Even without copay, $30,000. Without insurance, 30,000. But healthcare right now there's the different sectors within the jobs within the US economy, right? So there's a service sector, hospitality, like restaurant, there hotel. There's also a healthcare section, right? Right now, healthcare jobs it's been lost. People think that hospitals are always hiring nurses. If you work as a nurse in the United States, you make a lot of money. If you work overtime, you make over $100,000 a year
You know,
easily.
it's just that because I was talking to a
Mhm,
guy that works like nurse or something. He was just like student, but he had a lot of money and he was thinking to make some projection. Then I asked him if he has something on web, like, but he told me that he will rely just on his work.
mhm. Yeah, yeah. It's also a lot of work. A lot of work though. It is a lot of work, but they only need to work like 4 days a week, 3 days a week.
Even
But
people here in Morocco
mhm,
like immigrate to Canada to work as a nurse.
yeah, yeah, they pay good. They pay good if you work overtime, or a night shift. They pay
So,
really well. Yep, yep. But right now, the healthcare, they still are down by, I believe, compared to pre-COVID. I saw the data earlier. They're still down about 500,000 jobs compared to pre-COVID. So people think that you can just get a nursing job everywhere, but um, compared to pre-COVID, we are still down. But the job report came out today, I believe, and let me check the job report here. I know that earlier in January, like you said, Biden said that we created so many jobs, right?
yes.
Majority of the jobs that were created and people got back, they're all from the service sector. Service sector meaning restaurants and hotels, like all those. But all the other areas, they are still behind in the creation of the job. They're still behind, service sector. But the reason why also the job report is very important is that um, if we have an inflation going on and it is still not
Well,
being
this is the question I want to ask you about inflation. If we raise the interest rate, does the inflation decrease?
yes, that's the only way proven to work. So
So we will take money from people and then to decrease the
it's not
inflation.
it's not it's not the money.
Not
It's
that
so by
it's just
increasing
simple. I just simplified the things.
okay. So by increasing the interest rate, the Federal Reserve, they're collecting the money back they printed. You know why inflation happened?
Cash
Because
flow, cash flow.
yeah, the money flow, the money supply. There's so much money being circulated within the society because the Federal Reserve printed so much. They printed more than 50% of all the money created since the 1900s in the last 3 years. Think about that. All the more than 50% of the money printed came from last 3 years, last 2 years. So that's why there's so much inflation. You know how they gave so much money to people, stimulus checks? I don't know if you heard, but people got $3,000 to $1,500 because of the COVID. That's what happened here, and Federal Reserve printed that money and gave it away. That's why there's so much inflation, and all that money went to the top 0.01%, rich guys, because all these guys own companies and people have to buy and pay the rent to all these other companies, and eventually all the money went to the top guys.
They
So
collected.
yeah, they collected it, and because there's so much money being so much money was printed. That's why the inflation happened. It is not only because of the supply issue. It is mainly because of the money being printed. So we have inflation. So in order to find inflation, what we do?
What's normal rate?
Normal what? Rate?
Normal rate of inflation that
2%.
2%.
Yeah.
And how much is it now in United States?
I forgot, but it was between 5 and 6% right now. Five, somewhere
So
there.
it's
Uh,
high.
yeah, still high. So we have a long way to go still, you know?
So they
So
need to increase the interest
yeah,
rate
that
to
is why
reduce
we've been
inflation.
increasing it. And also, if we have a really bad war going on, because the dollar is a world reserve currency, people are gonna buy up the dollar. So whenever there's a really bad war, whenever there's something really bad going on, people buy up all the
Even if
banks buy up the
United States
dollar.
is engaged, like for example, a war between China and the United States,
Mhm.
because you said war for other pairs. I mean, other countries of the other pairs. Like for example, when Europe was like supporting Ukraine, and there was something like
Yeah, that
relationship
caused the
between them,
bullishness of the dollar. Yep.
bullishness of dollar and the bearishness of the euro.
Yeah, because they're inverse. But right now, you know what's interesting? Because Europe is fighting inflation too. Right now, inflation in Europe is worse than the United States. So
Yes, I
if the
saw that.
euro is raising interest rate, what's gonna happen? DXY is gonna go down, right? So it is very conflicting. So whenever DXY raises interest rate, and if also euro raises interest rate, it's gonna be more on the neutral side. But because the dollar is still the reserved world currency, it is still stronger. That is why it's still being it is still acting bullish right now. You see all this run that we had, right? This is the start of it was the so this was a COVID times, right? COVID time we hit we started selling off because the massive money was being printed. And once we accumulated enough here and we started the raising the interest rate. This is where it happened. Also, when we started getting the Ukraine war, that's what sparked everything. So this was when the war hit, and then the interest rate came in and took it all the way to this high here. So Ukraine war started it, sparked it up, and then the interest rate took everything to the top. That's what happened. So this
Uh,
is all fundamentals is stronger than the technicals all the time. Well, I don't mean like stronger, but fundamentals outweigh it is gonna triumph over the technical um, analysis any day. Okay, so always
yeah,
the fundamentals first. Yeah.
yes. A question. You said that Europe, if Europe increases also the interest rate, and then at the same time side to side with the United States, then it can avoid the XY to go higher.
Yeah, you can make a little
Does
range.
does
So
Europe increase interest rate or not?
yeah, they're gonna raise a lot more. I've been also following up with the ECB. There's a president, so European Central Bank. It is called ECB, and ECB's president, President Lagarde, she's the president of the ECB. And the reason why we started getting the bearish DXY here is because there was a news out from the Federal Reserve saying that we're gonna start lowering the interest rate. And then this happened. Also, Europe started raising more interest rate around this time. So that is why the DXY came down. So people and all the banks were pricing in, oh, we're going to start selling off the dollar now because we're going to start lowering the interest rate or maybe pivot. Pivot means raise it by less interest rate or no interest rate. Okay. So this is why we got the bearish dollar. But right now, we had Jerome Powell testifying earlier this week saying that inflation is still not under control. It might get worse. So now we have to keep raising the interest rate. We might raise it by 50 basis point. That means DXY is gonna um, go up more than this right now. But with the today's job report, it is still unsure. We have CPI. CPI is what measures the inflation rate. It's a consumer price index, right? CPI comes in next week, I believe. And depending on all these data, there's no way to predict. All the economists, so 2 out of 66 economists got the numbers right. So no one's perfect. Like all these guys who came out of Harvard, MIT, they suck at predicting the economy. If they were so good, we wouldn't be in this situation. If all these professors and economists were so great at managing the economy, we wouldn't have so much inflation, They made a mistake. That's why we are suffering, right? That's why the citizens are suffering. You see? Everyone around the world, they're suffering. Also China has a big, role that they played into this inflation because they supply a lot to the other world, right? They make a lot of stuff. So they cause a lot of issues with the supply chain. But the main reason is that we printed so much money, and that wasn't the right way to do it. It was just the easy fix just for a short period of time. Now we have more to deal with. That is why we have to keep raising more interest rate. And who, people who are not making a lot of money, they use credit card to buy stuff. But if you don't pay off, let's say you spend $1,000 on a credit card, you don't pay off right away, you're gonna keep paying interest every month on top of that. So it is bad for the common people, bad for the regular citizens who don't make a lot of money per year.
Question about credit card. You've been saying that you can't pay at the same time when you buy something, for example, without your credit card. I
Yeah,
mean,
if you do that, then you're fine. You shouldn't owe anything. But so the
but you
interest.
gotta be an employee to pay later.
Oh, so you're talking about as a business?
No, because you said, for example, everybody, everyone who has a credit card, he can go and pay something, even if he doesn't have money on his credit card. I mean, he can borrow it and then pay later with an interest rate.
Yeah, but the interest rate is so high that if you don't, and these people, they don't like, you have to understand. So in the United States, not, more than 50, I think more than 50% of the people, they don't even have like $2,000 in their bank account or $10,000. A lot of people in the United States, they live by pay check to check. You have to understand, not everyone in the United States is rich. They don't have that much money. So people just use credit card and keep buying stuff, keep paying for food, water, keep paying for electronics, and
Without
they don't
having
pay it.
the money.
Yeah, without having. That's why
But you need
everyone
to
is.
be an employee.
No, you don't have to be employed. Anyone can do it. Anyone
Mm.
can get credit card if you have a good credit score or okay credit score. Anyone can get a credit card in this
And
country.
if you can't pay your loans after,
Well, no, they don't even check that. So even if you are in college and not making money, you can still get a credit card and maybe have a credit limit of $1,000, right? But
there is a
if you,
limit. Yes.
yeah, there's a limit. But for me, a limit is higher because I have a higher income. But for young people, they have only $1,000 to spend. They spend all, like, I know people who have only a very low limit, like $1,000, and they buy something that's $800 and they don't pay off within 2-3 months. Now your debt is already at 1,100. You see, from 800 it went to 1,100 within like 6 months because you didn't pay off everything. You didn't pay off anything. You get what I'm saying? That's why people are going through so much trouble right now because they use so much with the credit card and they don't pay it back right away. So there's more debt on top of that every month, more interest rate, you know?
And people suffer to get back those debts.
Yep, yep, people suffer with that too. And because of the inflation, everything's, higher, even every food, meat, eggs, they're so much, higher now. So people when they pay
It's
for
even
food,
here in Morocco.
mhm, it's over there
They
too,
are,
right?
yes.
Yeah, so yeah, that's pretty much it. That's all you have to know. You just have to follow up with, what they say, the banks say, Federal Reserve says, what the chairman says, and you can kind of get an idea of how the market shift is going to happen. You know,
So, I'd
mhm,
like to ask you a question about I'm IMF,
mhm.
International
International
Monetary
Monetary,
Fund.
yep. Mhm.
Is it the same like Federal Reserve? Because this one is owned by Rothschild family. Yes,
Yeah, I mean, I don't know about IMF too much. All I know is that they do help
it's not.
countries.
It is not the Federal Reserve.
No, it's not. They don't have anything to do with
Because
Federal Reserve.
they give something like loans to
Yeah, to
countries.
countries. Yep.
Yes.
In Korea, it happened once in 1998 before. Right now, Korea is okay, but in 1998, people were buying so much exports. They were buying like stuff from United States, Japan, so much stuff outside the country that our country was in debt. Right now, we're doing good. We have companies like Samsung, Hyundai, Kia, LG. They're all from Korea. They're
Kia.
all yeah, they're all Korean brands. So we're doing okay, but yeah, IMF, they usually help out these countries. I think they recently helped out somewhere in Bangladesh or somewhere there. I forgot. Somewhere in the South uh East Asia. They were helping one of these countries because they just went bankrupt. Yeah, one of the countries over there. But yeah, this is all you need to know. And I can also go into the yen pair, the Bank of Japan later about it. But what's
Let's
gonna be
sum up.
very
Let's sum up what we have just said about news that come out every month or like every month or every week on the EU. We have NFP, CPI, and
CPI is for United States.
CPI for United States. No,
Yeah.
I'm not talking about GPY. Just to sum up for the EU or the XY.
Okay. Yeah. So CPI. So if
CPI
you, yeah,
to
CPI is for
measure
the,
inflation,
yeah, inflation. CPI. There's
but
also
before we have
PPI.
for jobs.
Are you talking about which one comes first or?
Which one comes first? The jobs and then the inflation.
Yeah, jobs and then the CPI later. Yes, and
What?
then the and then the rate hike.
Can you write the acronyms?
Um. Okay, hold on. Well, CPI. We also have stuff like well, CPI, PPI. There is some stuff that we have to watch out for. NFP, unemployment rate. There's no. I don't think there's any acronym.
Unemployment. Yes,
Yeah,
yes.
and then just these things, basic stuff, and then the rate hike. Um,
Is this not to trade, just to have an idea what the
yeah,
market move?
idea of whether EU is gonna be bullish or bearish. We
Yes,
can still get a basic idea. Yep.
expectations.
Yeah. So I've been bullish on the DXY since like here though, only because we had so much bubble created by the Federal Reserve, so we had to raise the interest rate. So I've been bearish on Bitcoin since January 2022. Yeah. So once you understand the policies and the fundamentals, you could see where how the crypto is gonna do.
Yes, I was in crypto. I started with crypto.
Yeah.
I
So
lost
yeah.
all my money.
Yeah. You don't want to get in too late. You want to get in. You want to get in when the interest rate is low. That's when you want to get in and get out before the start of the interest rate hike. Okay.
Mm,
Yeah.
things are
So
interrelated.
yeah. So yeah,
What,
that's it.
what did you write out there? It's 15?
This
Yes,
one.
what's that?
Wait, what, 50?
Yes, what do you mean by 50 BP per
Okay.
point?
Yeah. So BPS means basis points, right? It means raising by 0.5%. This one raising by 0.25%. That's what it means. That's all you have to know.
Yes. Let me check screenshot. Nice. I think this is all for fundamentals for DXY.
Yep. And EU, you could apply to EU because EU is the inverse of
Yes,
the
this is
DXY. Yep. And you could apply to GU too, in a way, because DXY bullish means that's short for the GU. So
a lot of pairs like USD pair,
AU, yep,
CAD.
everything. And
Yes.
UCAD too, USD CAD too. Yep.
Yes.